What an income statement is, or maybe you want to become a better investor, or you're studying in college, or maybe you own your own business. By the end of this video, you will have a full understanding of what encompasses an income statement. Being able to understand an income statement is crucial to understanding a company. Using my work experience as a business valuation consultant will help provide you with a deeper understanding of the income statement. Here's an example of an income statement. Take a second to familiarize yourself with it. P&L or a profit and loss or an income statement can show a company's earnings or how profitable they are in for a given period. They can help investors make informed decisions, and they're required to be filed quarterly and annually for all public companies. That would be called a 10Q or 10K. An income statement allows an investor to spot trends in revenue, costs, and profits. Through deeper analysis of these numbers, you can spot companies' strengths and weaknesses by comparing them to companies' historical results as well as competitors. Income statements are created from submitting bank statements and receipts for expenses to an accountant. Then they sift through the data and create an income statement. They can be prepared by certified public accountants or internally prepared by management. The SEC requires all publicly traded companies to post financial data, amongst other important data, online. You can find this data by typing in the company's name followed by investor relations on Google. So, for example, Apple Investor Relations will take you to that landing page. Quick overview on an income statements format. This income statement was downloaded from Apple's investor relation page. Income statements are all organized the same way due to GAAP accounting, which makes our life easy. This format usually starts out by stating the company's name first so we know who we're looking at. This next line shows us if we are looking at the business on a consolidated or an unconsolidated basis. Unconsolidated would mean it is not the total earnings for the company, but rather the earnings for a segment or product. Consolidated would indicate that the financials shown are for the business in its entirety. Next, since some businesses like Apple are so large, they state their financials in millions. Sometimes there are other notes for what is and isn't in millions. Smaller companies will sometimes state financials in thousands or actuals. It is important to consider this information as it can significantly impact your analysis of a business. Next, income statements will contain a time frame for when these numbers were reported. In the case of our example, it is Q2 2025 and Q2 2024. A quarter refers to 3 months of data derived from 3 months of the data representing a quarter of the year. It is common for companies to provide you with either financials from the preceding quarter of this or the same quarter from the last year. This allows investors to make meaningful comparisons and discover trends in companies. There are several line items on an income statement that you should be familiar with. We will discuss each item in depth through the following slides. Revenue, cost of goods sold, gross profit, operating expenses, net income, and EBITDA. So, what exactly is revenue? Revenue, or sales, is the total amount of money a company brought in. Sales can further be broken down into two categories: revenue from products and revenue from services. Remember, these figures are stated in millions. So Apple didn't generate 94,000. They generated 94 billion in 3 months. If you multiply this number by 4, you can get a rough estimate of annualized revenue. For more advanced analysis, you can use the last 12 months data. In Apple's case, their revenue is broken down between products and services. Product sales can be thought of as any time you or anyone buys an iPhone, an Apple Watch, iPad, AirPods, etc. Services include services Apple offers, such as the App Store, Apple Music, Apple TV, iCloud, payment services, etc. Product sales and services sales combine for total sales. While on the topic of revenues, I think it is important to discuss growth rates. Growth rates are the increase or decrease from the prior year or quarter. It is calculated as follows: ending value divided by the beginning value minus 1. Order of operations does not matter here, so no need for quotations if you're calculating in Excel. Easier for me to remember is just simply new divided by the old minus 1. As an example, I calculated the growth rate from Q2 2024 to Q2 2025. You can even dig further and do the calculation yourself to see what is growing faster, products or services. So what about cost of goods sold? Cost of goods sold represents the cost you pay to your suppliers and employees to create the good or provide the service. You would find cost of goods sold on an income statement right below the revenue and sales number right here. As discussed, cost of goods sold can be broken down into services and products. Services consist of wages you pay employees, such as iCloud or to tend the Genius Bar. A cost of product takes into consideration all of the costs of creating the product. For an iPhone, this can be quite complex. On the right is a picture of all the materials needed to assemble an iPhone. Gold, cobalt, lead, gallium, manganese, just to name a few. So then, what is gross profit? Gross profit is revenue less cost of goods sold. All the money you collected minus what it costed you to sell those items. Gross profit as a number is kind of useless. What does it mean that Apple generated $43,718? Is that good? Bad? What about compared to the industry? Common size analysis allows us to make useful comparisons. Common size analysis is the method of dividing a line item by net sales. This will yield a percentage. For example, 43,718 divided by 94,036 is 46.4%, which means in total, Apple keeps 46 cents for every dollar of revenue after paying what it costed to create that product it provided. So then, what are operating expenses? Operating expenses consist of all other expenses needed to run the business day to day. Operating expenses consist of research and development and selling, general, and administrative expenses. They can be found here on the income statement. R&D, or research and development, in the case of Apple, will consist of expenses associated with the innovation of new products. Think of Face ID, cordless headphones, fingerprint unlock. All of this underwent massive amounts of research, creation, and several adjustments. Here's a cool chart I found showing what selling, general, and administrative expenses consist of within the broader context of operating expenses. For selling expenses, there are selling and marketing expenses, advertising, and travel costs to go in person, selling, trade shows, etc. For general expenses, there's, rent and utilities, office supplies, technology if you subscribe to software, and equipment. And there's also insurance. Administrative expenses would be salaries of employees, accountants and IT professionals, and legal and consulting fees. So, what is net income? Net income is what is left after you count up all your revenue and then subtract every expense the business has incurred. This is net income or profit. This is where net income can be found on an income statement.